All right, Christian, no lengthy intro needed here. I suppose you've been on the channel a couple of times, and you're now doing an all-share sale of Adventus and a bunch of other things in that news release that you explained to me later on, in return for what is, rounding it down to 1/10 of one share of Silvercorp, which comes to about 50 cents per share worth of Silvercorp per share of Adventus, that is, basically, based on yesterday's close, that is. And there are a lot of mixed opinions, if you will, on this, specifically about pricing, because it's really only a 20% premium to Adventus's closing price yesterday. And it's also at what seems to be a bottom for the juniors. So yeah, let's maybe start off by you telling me about this valuation here in the first place.
Sure. We've talked in the struggles last year from an Ecuador political perspective, uncertainty of permits and a terrible market, and we were out of cash, and we needed cash to get us through all of that and get our permits. So that was the Luminex transaction that closed in January. And around January of 2024, we received key permits so we could start construction. But we were short a significant amount of equity to build a mine, and we launched into a strategic review to determine what was the best route to maximize our NAV per share, to bring in the capital so we could start construction as soon as possible. We embarked on a very robust market pass, lots of NDAs, lots of site visits, very competitive. And what you're seeing here is a result of that process and the best offer, the best path forward to be fully funded to move this company forward. So it's not like a one-off, oh, they made us a proposal, we'll just take it. This was a full-on, very thorough market pass. And you have to understand from a valuation perspective, we were 22 cents at PDAC. So within 2 months, we have more than doubled. And this offer came when we were already up 70 or 80% from that bottom. And the reason why Silvercorp could still pay a premium is because they were on a stick as well in terms of their share price movement, because their offer for OreCorp expired. There was a huge short position on it. And when it expired, the shorts covered, plus silver went on a run. So if you take the last 60 days and then see this offer on the back end of the last 60 days performance and the offer on the back end of it, this is actually a fantastic outcome for our shareholders. Of course, an important part of the analysis for our board, it was, how does the company look standalone in doing a very significant equity financing at a discount and diluting the NAV per share as a result, versus doing this transaction at a premium with this company? Silvercorp has $315 million of cash and cash equivalents. They're actually pushing both El Domo and Condor. We're forward aggressively here. They like both projects. Whereas if it was Adventus standalone, all of our projects would be in care and maintenance, and we could only be advancing El Domo. So Silvercorp gave us the best offer. They have more than enough cash to advance any of our projects, let alone El Domo and Condor. They're extremely liquid, so anybody who wanted to exit the stock can exit today if they want. And in the silver peer group, they're the cheapest producer. And if you believe in silver, and I think silver is underperformed versus gold, Silvercorp can be back to $10 a share if silver goes up, let's say $10, which still would be cheap compared to gold. And that would imply over $1 a share for Adventus without any credit for our assets. One of the big things here is we're fully financed to production now. The financing overhang has been removed. And we've exchanged our shares in a very liquid and cheap silver producer. So I think those answers should suffice.
Sure. And you also say that it's, this brings it brings investors in a more liquid position. I think that's something that we can talk about later on, specifically about Ross Beatty's Luminex now being in a more liquid position too. But can you define best for me? Because he said the best offer, and maybe you can just sort of wind it back here to the beginning of it, because there's a bunch of other things happening in that news release. It's not only the all share deal, because there's another financing. And talk to me about that best part specifically. Like, is it best as in that was the highest offer, or is it strategically best?
Uh, I won't go into the details of that, but obviously we got a very sophisticated board, and it was really an easy decision to go with this proposal. You're right, there's a financing involved, close to $26 million equity financing. We would have to equity finance in May anyways if we were going standalone. So it's not like this is additional dilution or anything like that, or deal protections. To do $26 million at a 10% discount, no warrants, no fees attached to that, and that money goes in next week. So if the transaction doesn't close, that money is in our pockets. That is very valuable for us. It allows us to continue to advance progress on our assets in the business as this transaction closes, or on a standalone basis going forward. So that's you're not going to see that from most M&A type groups. Was it something that tipped this one over another group? No. This is the way that Silvercorp has made prior offers for OreCorp and Guyana Goldfields.
Um, I understand that development capital is really hard to raise right now, and especially at these levels, it's a tough decision. But if you look at Adventus as a company over the last 6-7 years, I think it's fair to say that it's a company with a good team and a board. And I mean, you've been buying in the market over all those years, and your board members too. And you've got one of the best NPV IRR ratios. I think you compared it at some stage to Adriatic and Silvercrest. You got Wheaton Precious to sort of give you that vote of approval. And still, if you look over those 7 or 8 years of hard work, only the shareholders in the last 12 months make money. And where I'm going is not just trying to criticize, but is it really like the point in the cycle that's problematic? Like share price is low, difficult to raise, we are going to dilute, or is it perhaps your deal with Wheaton 2 years ago that now forces you to really move forward with your team, because you've got your team in place, your engineering in place, and you cannot really hold on for a couple of months and say, let's just wait it out. What is, in your opinion, sort of the reason that you will have to move forward right now, and the reason that you cannot get more out of this project? Because the project may be amazing, but the outcome is perhaps okay, but not amazing. So maybe you can explain that a little bit.
Well, keep in mind, I don't see this at all as selling the company. Our core Ecuadorian team continues with Silvercorp. We're just exchanging our shares for another company that we think brings a lot of value. So it's definitely not a sale. I think M&A is very good for this business and should happen more often. So this combined company reduces risk in all facets, and Silvercorp, as a result of this transaction, has a chance of index inclusions, increased percentage in indexes, and other aspects you might see in due course. But specifically to your question, since the Ukraine-Russia war, there's been a liquidity crisis in the junior space. Antonio and I have talked about that. We went from a peak of 45 institutional ownership in the company, to, I think at the low, we were in the mid-20s. And several of these institutions sold down Adventus in a very punitive fashion. They took us down from $1 to 25 cents single-handedly. So I blame the institutions for getting us into this called 30 to 50 cent range. And then we had the uncertainty on permitting, and the Ecuadorian politics didn't help as well. So when you get to a certain level like that, you really need to protect the number of shares outstanding that you have, protect your NAV per share and try to find a path for shareholders that have a much higher ownership price to be able to recoup that money. And this is what this transaction is meant to achieve, is to try to get investors like myself that have a much higher ownership price than where the stock is trading back to $1. The institutional world, despite robust metals prices, has not gotten better in the mining space. It's much worse than it was 3 years ago for the junior space. We would struggle, and I might even say it would be impossible to raise the amount of equity we need to build El Domo in the markets today. So then your last question is, so why do you need to build it now? Our agreement with Salazar Resources is under the spirit of, if commodity prices are strong, if you have your permits, you need to go build. And we have the most economic undeveloped copper project in the world, and we think copper is going to $7, $8, $9 a pound over the next few years. So why would you wait around twiddling your thumbs if you actually can find a pretty neat way to be fully financed and start construction and be in production early 2026? This has never been a company where we're going to sit on our hands and wait. This was always a company where this is definitely a mine. This is very economic. We're going to push forward because we believe copper is going to the moon. And that's been one of our differentiators.
Is there any connection between the Luminex deal and this deal? I mean, did it help in some shape or form, or was it just the situation in November? At that time, it was the best way forward to merge with Luminex and Ross Beatty's team, basically. Is it completely independent from this deal, you think, or did it help get Silvercorp interested?
What we were faced in Q4 of 2023 was out of cash and uncertainty of permits in Ecuador. Luminex saved us. We saved each other, call it. Like it was the deal to do at the time. We were not talking to Silvercorp at that time. Silvercorp was looking for assets that were construction ready. They needed to see the permits come through, which came in this year. We didn't have visibility, clear visibility when we did a Luminex deal on the visibility on those permits. And it so happens that Silvercorp really likes Condor. So the completing Luminex, bringing Condor in the fold, and getting the permits substantially improved the attractiveness of the company for Silvercorp. And then they came along over the last few months.
Do you think Luminex got the better deal or the upper hand here? And would you have done it differently had you known a deal with Silvercorp was incoming?
Absolutely not. I think we had this conversation before. The Luminex assets, in theory, are worth more than the Adventus assets. The NPV5, that's just the number that analysts use for precious metals NPVs. NPV5 at current prices for Condor is close to $1 billion, plus the exploration portfolio. We paid $30 million for that, plus an underwritten $18 million equity financing by Ross. The NPV8 of Curipamba is $320 million. So yeah, one's construction ready, one is longer dated, but I think Condor is going to double in size in terms of the ounces in the ground. Like it's a very substantial project. So what it did do is it pushed the pro forma company more towards a precious metals company. And the majority of the interested parties in Adventus here during the last few months have been precious metal producers.
You just talked about your average cost of capital. Do you know off the top of your head what your average cost of capital is for your own shares?
About $1.
Okay. Well, because I was going to ask you that you and I have spoken before about all sorts of shenanigans, if you will, in the junior space, and I'm not obviously alleging that anything like that is happening here. But you told me to watch out for change of control fees and to basically figure out what management's incentive is in the story. And there are change of control fees involved in this deal too. So how do I know you didn't do this deal for you, but you did it for the shareholder?
Well, I created this company, built it through this roller coaster ride over the last few years, have an average ownership price of $1, net of taxes on the change of control, and the shares that I have in RSUs, I will net $1.7 million Canadian after 7 years of heartache. That's hardly what you can retire in Toronto. So that's inconsequential. I've kind of written off the amount of money that I make from this investment, whether it be from change of control or not. I see it more as I've learned a lot. I create a lot of new relationships. The next one will be a lot easier, but it has nothing to do with change of control. The biggest thing here is access to capital in the most efficient way possible to maximize our NAV per share. The average ownership price of Ross Beatty is probably 70 to 80 cents a share here. Novus is 92 cents. Like, it's not about me as an individual. I mean, if the board thought that this was all being done for a change of control fee, they would have ring fenced me from everything. The other thing is the process. We ran a process. It's the best offer. So there's nothing to that, Antonio. I put my pound of flesh, and I haven't slept last night. We were negotiating until 2 in the morning, and I'm continuing on doing calls like this and meetings all day long.
And I don't blame you for the record. I might be naive here. I guess I'll know in a couple of years, but I don't blame you for this. I mean, starting a company is hard. I've never started a big company, but I've started a couple of small companies. So starting a company and bringing it from nothing to something and then doing a deal in and of itself is very complex. So I wouldn't blame you if you made 10 times as much money either. Just trying to understand what the driver behind this is. So yeah. Thanks for that explanation. Luke, you want to ask something else?
No, I think it's well explained. It is a tough market, and to raise capital, I mean, to start a company in 2017 and to get it through bull and bear markets, to finance through dilution, and to make deals, to do permitting where you have not full control. I mean, it's very difficult. That's why mining is difficult. And I mean, we have asked a couple of tough questions, I think, to find out like how are you looking at these things? But let's congratulate you with the deal, and hopefully the Silvercorp story will continue and will give you more upside in the future.
Yeah, congratulations, Christian, on closing this. What's next for you? What are you going to do after this?
Well, we've got a few more months here before this closes, of course, so don't want to jinx anything. But at 1.7, 1.8 million, I can't retire. Maybe I can put a down payment on a house for my family. And I love this business. So I have some ideas, and we'll be back at it on launching something or being involved in something in Q4. And as I said, I hope I'm a lot smarter, got more experience, and probably the most important thing is I built very strong relationships with investors, in particular sophisticated investors. The largest stakeholders in Adventus have all told me on their own accord that whatever you do next, Christian, we're there for a check. So I basically picked the hardest thing to do as a first-time CEO, to pick a shell company with a few $1 million, pick an asset somewhere on the planet, so pick Ecuador, and decide for 6 years to be stuck in the Lassonde curve trough of PEA, PFS fees, detail engineering, permitting, investor protection agreement, different governments, all that kind of shit, right? So that's as hard as it gets in the business. I mean, the even harder would be actually to build it in Ecuador as a third mine. But we're still shareholders in that build. It's just being done now in a much less risky way. So my interest is being involved in an interesting exploration story and or building a producing mining company. And I'm sure I'll be back in your show later this year when I've found the right fit.
Sure. Yeah, you're always welcome to come back. And thank you, Christian, for the overview. I would have offered to help you retire to the Balkans for a small fee, of course. But you're one of the few people who, despite some feedback, despite some setbacks, I was going to say feedbacks, maybe feedbacks too, but despite some setbacks and missteps over the last few years, is at least trying to do things right in this space. And I'd hate to see you go from the industry, but I'll have to let you go from this call because I know you have a lot of things going on today. And Luke, we actually do as well, because while this was a good overview, it's an important piece of news there. I think as M&E is picking up, it's definitely not everything that's happening or that has happened this week. And you've sent me a beautiful list here. I actually want to start with the bad news on the redness on here, Phil. Maybe it's because it's almost summer and the weather still sucks. Or maybe it's just because red reminds me of my hair color and I'm a little bit biased. But Volcanic Mines here is down almost 50% this week, down to a $7.5 million market cap with 45 million shares outstanding, which already kind of looks attractive to me. But if you look at the chat boards, there's a lot of pissed off shareholders or ex-shareholders at this point by the looks of it. What's happening here?
Yeah, it's full disclaimer. I don't own it, but I own the sort of partner company Radius. Volcanic is a small exploration company, and they joint venture the project from Radius, and it's a project in Guatemala, and not everybody wants to invest there, but there's a lot of opportunity. And last year they identified a new project with lots and lots and lots of high-grade gold. And what you do as a junior mining company when you identify a new project, I mean, the role is also to explain people about it, right? You cannot just sit in your office and not tell people about it. So yet you're telling people high-grade gold everywhere because that's what you found. And you basically start, and this is not against Volcanic or anyone, but you start hyping the story a little bit because you want to tell the exciting part because you need to raise money. That's just part of the business. And this company didn't even have to raise money because they still had enough money in the bank. And people start talking about it and you get excited. I mean, if you look at some of those trench results, really, really high grade. And what you often see, and it's not just about Volcanic, what I want to talk about, but is that you see a run up in the price because the more people talk to the company or look at an interview, they get excited and they start dreaming as well. Like, what if this high grade gold also, is found in drilling and maybe even in consistent drilling? Will it become another newfound gold? Because it is vein type as far as they can see, I think. And you see a share price go up from 13, 14 cents to 30 cents or 35 cents, just because the expectation is set. And I always think about this expectation level. How often is a company really beating the expectation? How often are you waiting for drill results and something amazing comes out? And again, you can talk about it with Awali, but most people, and in most cases, I also get disappointed because it's not as amazing in the first case. And if you're Newmont or any big company, you give a team some time to explore and drill, and you typically don't make a discovery in your first hole. But again, Volcanic started drilling and didn't find immediately what everybody was hoping for, and then the stock is back from 30 cents to 15 or something, I think, yesterday, or 16 cents today on Friday. And then you have Radius. Radius has several projects, and also this stock went from, initially it was 30 cents. It was already a bit of a disappointment last year on another project, something similar, high expectations, not the right result, and bang. And it almost doesn't matter if a company has 6 other projects on the go, which are just as exciting. Everybody is just excited and wants to be out on that day immediately. And how do you take that into consideration is my real point here. Should you always sell on a hype? And hype is not necessarily a bad thing, but just high expectations. Like, dreaming a little bit. Could this be the next big thing? Because this company cannot make a discovery, or in most cases, a company cannot make a discovery in 1 or 2 or 3 or 4 holes. And as far as I can see, this project is not killed yet. It has enough potential. It's just very difficult to target what they are looking for. So I don't know what your experience is with stories like this, but I feel that it's almost prudent to always take some money off the table if the expectation is so high that the stock price almost got ahead of itself, and the outcome, everybody's waiting for the same outcome. And then you only have 2 directions, up or down, and nothing will be neutral. Everything is either bad or is good.
Well, my experience with pretty much everything in this space is 0. So it is, in this case, almost 0, actually. But Awali is down this week, so just like all the other influencers, I'm just going to not talk about it. I'll go and delete some tweets that I ever put out about it. But what I'm wondering specifically about it is market cap, shares outstanding. How do you deal with the situation as a company? Of course, in thinking about dilution here, when I say shares outstanding, I like the number of shares outstanding. Seems like it's tight. I'd like to speak to management and know how many people are actually in the story, that they put the shares in the right hands, and yada yada yada. But the point is, it's now a $7.5 million market cap company. Falls down a little bit more, you're falling in a $5 million range of companies. Very difficult to raise capital here because of that sort of belief that the market has, and people just like putting money in stuff that goes up, right? So this is kind of a difficult situation to deal with. I understand they have some cash. I think, what do they have, like $3 million? But still, how do you deal with financings? And is that the most important part here?
Yeah, and in this case, it's even a pretty good share structure, and I guess also a pretty good shareholder base. But once you have this disappointment, unless you really have some bigger investors behind it who are willing to almost to help the company out, start buying in the market and get the stock price back up. Sometimes it's almost against in so much force that you cannot get it up, because everybody, it would almost be illegal to really push it up just for the reason of pushing it up. But these companies are they're all depending on financing and on issuing stock, and ideally for the company they do it at a high level. And if you get in a situation where everybody is sort of disappointed and may not believe in it anymore, sometimes you're just stuck for a while at a new price level. And we can talk about another company perhaps in a minute that also was stuck for a while, but you get stuck at a new price level, and if the company really needs money, it almost has no other choice than to raise money at that level. And typically there are people available if there's still a bit of hope. Of course, if the story is killed, then it's a bigger problem. In this case, I don't think the story is killed. I think there's enough potential on the project still. And I don't know if they have to finance, because they had 3 million left, maybe after this program 2, or maybe even a bit less. I don't know exactly, but there will be a moment to finance again. And if they do not get off this bottom, or this new bottom again, then indeed you are sort of stuck, and you are again back at the drawing board. Like, are we going to finance right now, or are we going to take another risk by drilling a little bit more but the more risk you take, the more money you take out of the treasury to drill more holes. And if those holes are not going to be spectacular, then you are in even bigger trouble. I've seen companies go from $20 million to actually $2.5 million, just because everybody realized this company will have to raise money, and they went a little bit too far. They are completely out of money, and they will almost have to beg people to give them money, and then it will become a 3 cents financing. So yes, I'm not saying that's what happens here. I think this company has some good backers, and that's often helpful. These people have networks, and but again, people don't just want to pay up just because they like a person. So yeah, it's tough. And I think about it every time I own a stock where there is this waiting moment, like, okay, finally we're drilling. Can we repeat this thing, or can we finally find it? And even in the best scenarios, I assume that it's not going to happen. And what will happen then? What will be the next step if the next result is not amazing? So in a way, this is business that should be done by big companies. But since probably the 50s or 60s, this is business that's only being done, or mostly being done by small juniors, and they constantly have to fight between, all these emotions and cycles. So I think as an investor, to make my point, you always have to assume that there's a very big chance that it's going to be very disappointing. And what will happen next? Are you going to be comfortable to sit there and just wait and give them another year? Fine. But if you are a little bit of a trader, should you really wait with your full position for this hole where maybe another 50 or maybe another 100 people are waiting for the same moment and will also decide at that moment, that morning, I'm going to click the sell button. And that's why I think it's typically prudent if a stock runs up on too much expectation to sell a bit.
Well, I feel like that's a little bit of a personal warning there that I'm just going to refuse to listen to for the time being. But I appreciate you giving it out nonetheless. It's also interesting looking at the share registry here. We should have asked Christian about this. He didn't have too much time, but Silvercorp owns about a fifth of this company, 19%. Be specific. Management owns 8%. This would be an interesting interview, maybe. Well, Silvercorp would be an interesting interview too, but I mean, Volcanic Gold Mines here would be an interesting interview. What do you think, sort of saving the company from this situation? Because the jurisdiction is not as straightforward either. I mean, it's just, I'm not saying it's a bad jurisdiction, but it's not BC, which people know and understand easily. You tell them BC, they know everything. In this case, they might have more questions. What will you think about a deal with a major here, sort of a wallet type deal where they dilute at the asset level so that they can save the share structure?
Well, in this case, it's a bit more difficult for now, I think, because Radius owns 50% of this project too. And I mean, it's difficult for Volcanic, I think, to sell part of their 50%. So Radius is in a little bit more comfortable situation that they don't have to fund right now. And they are more the company within this group of companies that is more the prospect generator. They vent things out and they have like 6-7 projects on the go. And that's why I was so surprised that their stock also got so much of a hit. So everybody apparently was waiting for this result and sort of forgot everything else. And even then you have to go back to the market again, or at least talk to your investors again and tell them like, hey, this is not killed yet, but we have 6 other things on the go and 2 where we will be drilling soon. And so I think it's not possible for Volcanic in this situation to do a joint venture unless they first make a deal with Radius to, for example, buy out the 50%, give Radius stock of Volcanic, own 100%, and then find a company. But this is also indeed a part of the world where not everybody is happy to go in. But for sure, there are companies who also take that jurisdictional risk. Personally, I think it's a little bit too early to do that. I think they may just do another financing again and continue the groundwork, try to target and try to get out of the situation again. I just think that sometimes you have to accept a new price level for at least a little while, give everybody the chance who is impatient to get out. And once you feel like, okay, we are left with our sort of more loyal shareholder base and maybe some shareholders were willing to buy a bit more at this low valuation, it's time to start, I mean, the work needs to continue, but also to start press releasing again what your new plans are and maybe slowly start to build confidence again. It's really, I forgot the words that Friedland used in the book, The Big Score, but it is really sort of an art to run a junior mining company. You constantly you have to put up a certain show. You have to convince people like this is the thing you want to be involved with, because otherwise you miss out. And everybody has his own style, of course. But I think Volcanic has to start it up again and try to get people to get excited again about this project, which is not just Volcanic related, but related to any company that has a short-term disappointment and needs to get people excited again.
This is it's interesting looking at the list that Volcanic was actually not the worst performer, and something that came up to me, and this is maybe just me having grown up in a post-communist country that's having that scarcity mindset, but when I see something that is like red and discounted and whatever, I'm almost instantly attracted to it, and I almost instantly get biased about it. Like I would now just want to go through Volcanic Gold Mines presentations, talk to management, read the MD&A, and so on and so forth. But just I would be looking for a reason to buy it as opposed to looking for a reason not to buy it, which is typically what I do. Is that something you struggle with too? Sort of mentally want to buy stocks that look discounted?
Well, a little bit less than maybe in my early years, but still, I look at really at where I think the company is in terms of other people's mindset. So if I see a company often with something like this that gets punished, I suspect that this company will pretty rapidly move on and start drilling whatever they need to do. But sometimes a company, for some reason, cannot really continue because they need to raise money or there's trouble in that jurisdiction and they have to really put on the brakes. And maybe in the bear market, there are a lot of companies that completely became inactive. And suddenly right now you see them becoming active again, doing restructures and renamings and all those things. I like companies that had sort of a sell-off, but stayed at a certain level for at least a number of months. So you look at the volume and you notice that, hey, the stock is no longer going down anymore. I've seen it. I've looked at it a number of months. It's still cheap. It didn't go up, but it also didn't go down anymore. And you look a little bit at what brokers are buying and selling it, or which houses. And at some point you realize, hey, this company may even be approaching seller exhaustion. I mean, if you wanted to sell, you sold it at the event itself, or maybe a week later, or a month later, or 2 months later. But after 6 months, if it still has the same price level, and maybe some people, you notice that there's some accumulation going on in the market, sometimes that's the moment to think like, okay, it seems to hold this level. People are willing to buy again. And ideally they don't have to raise, because that's always hanging on top of the market. Like, hey, if they have to raise, everybody's afraid. But if they don't have to raise, that's ideal, because you know that they can continue their work again whenever they want, whenever their situation resolved itself, whatever situation the company is in. So yes, I still like these discounted things, but often after the spike down, it's not always, and very often not the case, that the company immediately gets back to their original situation, unless it was just too much. And in Radius' case, I felt yesterday it was too much. The stock went to 8 cents or something. And they have so many projects that are really interesting, in my opinion. And also those projects have some issues. The one they don't own outright. The other one, they have no control over the timeline. But still, they have a lot of value backing up that $8 million, what they were worth yesterday. So then it's, I think, worthwhile immediately buying in the market on such a bad day. On Volcanic, I find it a bit harder to estimate, like, is it going to rebound immediately, or will it stay here for a while? And perhaps it's still very illiquid, so it could also bounce back. But with Volcanic, I find it more difficult to predict. And I think about, to really come back to your question about the investor psychology quite a lot, like, what is the general person thinking about this? And the moment I'm getting a little bit lonely in this trade, I feel more comfortable, because, you know, if nobody's excited anymore, there is no expectation. And if there's no expectation, there's also typically no disappointment. So, and that's often in my case the moment I get excited, because I think, if this company just starts up again, that could already be enough to just double, and then you have made your first bit of money, and then you can reinterpret the company and say, do I want to own it for a long time, or am I happy with this double? And this is a little bit different, I think, because it's so instant on a bad result, or let's say an below expectation result.
Well, we talked about no warrants, no money last week. Today we're talking about no expectation, no disappointment. I don't like this trend, and it also kind of sounds like my wife, which is depressing. But it's not all depressing this week. There's stuff going up. 2 things, but we should maybe try to get Volcanic and or Radius, or both of them at the same time on an interview too. There's 2 things going up. One of it is an oil discovery that you sent me earlier in the week too.
Yeah.
I looked at it. Way out of my depth, so I don't even know what I'm looking at, but obviously I like the green. It's almost doubled this week. What's Sintana Energy, that is? What's happening there?
Yeah, and I also try to stay away from things I don't really understand well. And even though I have an oil and gas background, it was from a really upstream, downstream point of view. I'm not really, I've never been in exploration there. But I did notice to promote my own company a little bit, the Gold Discovery app, which you can download in the App Store, sent me a discovery alert. And this is not based on geological reviews, it's based on language. We have trained the model so that it recognizes text or language based on previous discovery announcements. And this one came up in January when they announced a discovery in Namibia, oil discovery. And normally I completely don't look at these things because I on my own, I have no way to evaluate it. But I did talk to some people who have more experience in the oil business, and pretty quickly I figured out that this is potentially a really big discovery, but there were a number of tests to be done. And I'm not going to go into a lot of detail because I may look bad, but there was a couple of tests to be done to see if the oil is also flowing. I mean, a couple of flow tests. And so I bought a little bit. I don't want to make this sort of big position for me because I need someone else to tell me if the next thing is good again. And I prefer to just decide myself. But they have 5% of perhaps the best oil discovery in years. They are carried. So you could say they have a sort of a royalty on one of the best discoveries. And this week it was confirmed that that drill stem test was positive, and was more of a confirmation that indeed this may be a 10 billion barrel discovery. And that compares to the Liza discovery in Guyana, which Exxon made in 2014. And that's a massive discovery. And it's too early still. I mean, it's like a mining project where you have 2 drill holes into it and you have consistency, but there's still many questions to be answered. That's how I look at it. And the stock doubled. But what is a potentially the best oil discovery in 10 years worth? I find it really hard. I can only do back of the envelope things like this price per barrel, or perhaps what did Chevron pay for another company they bought in that other discovery in Guyana. They paid 30 billion, I think, or 50 billion for that 30%. So, I mean, if this project could be worth 10 or 20 billion, the 5% carry that Sintana has is amazing, I think, and that's why the market reacted, and that's why there's maybe a lot more in store. I'm not going to suggest that it's a buying opportunity right now. I just wanted to just highlight it for a moment because I was quite fascinated about a small company, relatively small, 200 million, sitting on 5% carried interest in a really, really big oil field. So that's I bought a bit, and to be completely honest, I sold at 55 cents just before the good news because I realized, well, what am I doing here? I don't really understand it myself. I need somebody else to tell me if it's good or bad. I'm just gambling. So I sold it for that reason, knowing that this test was coming up, and it was maybe a wrong decision because the stock more than doubled. Since that point, I sold. But on the other hand, my decision to sell was really because I didn't understand it well enough, and I still stand behind that. I sold it for the good reason, but the outcome is less pleasant because I didn't make that big double this week, and perhaps way more. But I wanted to highlight this anyways for people who didn't notice the news yet and who may have more insight into oil. And if there's people watching who have a good feel for these things, maybe it's interesting to just text us and join us on one show and tell us a bit more about oil exploration versus mining exploration.
For sure,
because I think it's interesting to talk to someone who knows more than us about this.
Yeah, for sure. That'd definitely be interesting because that would actually be my pushback here is like, why even bother with it in the first place? I would have seen it, maybe registered, see like people talking about it on Twitter, whatever, but just move on because there's 0% chance with me having any type of edge in this market. And although there is a small chance for me having an edge in stuff like mentioning Awali a couple of times, but Awali at what was a $3 million or $5 million market cap, there was a small chance for me to have some sort of an edge that I've read all the documents and whatnot. But with stuff like this, I'm lost before I've even begun. So actually, a question here would be why even bother? Like, why not just leverage your knowledge in something that would be a higher margin for you, where it would cost you less time and effort to understand a mining company or an exploration company for metals instead of an exploration company for energy?
Completely agreed. I mean, it's one of my ground rules, to be honest. So I broke that rule for a moment, and I do every now and then invest in an oil play with not too much capital if I feel like it has really a lot of potential. But the problem is I have to talk to other people. I may have to screen a website like CEO.ca or Hot Copper or Twitter. And I feel a real dummy if I need advice from people I don't know that go behind a fake name and tell me that this is a good thing. But if I talk to a couple of people I do know a little bit and they do have knowledge in this business and they can convince me that it is very interesting, I'm sometimes willing to buy a little bit, especially because it was clear in January that this could be a really, really big oil discovery. And then with a bit of thinking, you look at they have a partner, that's Galp, a big company. You look at their valuation and you looked at how much they responded to the good news, and you translate that back into Sintana's. I don't even know if we mentioned Sintana's name so far, but into Sintana's 5%. At some point, you realize, well, there's not so much downside unless the next test fails or proves that oil is not flowing. But again, I fully agree, and it's one of the things I often repeat to people: try to invest in things that you really understand, that you feel comfortable with, and that's not the case for me with oil stocks. But yeah, you can make an exception if it's small enough and you can live with a loss. Let's just phrase it like that.
Yeah, the position sizing would have also just kind of been my expectation of an answer from you, is like, just if you're really excited, like if you, I don't know, you're feeling something, make a bet, but think about position sizing. Just don't go too big too quickly. Yeah.
It's never too late to learn, of course. I mean, junior mining, it took me, I think, 5 years to understand the core of it, and it took me another 5 years to. I mean, I became a bit experienced in the bear market because I started in 2012, and 2016 I sold everything way too early because I was conditioned for the bear market. Every time there was a small win, just take the win because next time it would go down again. And in 2016 that was the wrong thing to do, so I did the wrong thing. And only later that year I realized, let's still buy back because and that made me some money. But 2016 was not as good as it could have been. And in 2020, when another bull market started, and I was a bit lucky with the timing of selling and buying, it was a really good year for me. But it took me, let's just say, 5 to 8 years to really become sort of comfortable, which is dangerous to say, with mining and high risk juniors. So it may take me another 8 years to become fairly comfortable in oil stocks. Maybe not 8, maybe 5, but it's never too late to learn, I think. And that's why it's not just trying to make a bit of money, but also trying to learn a little bit more about a different industry or different subset of the industry.
Yeah, and you also do this. You do this full time now, so I think it's fair to say that you're comfortable doing that. So that's
yeah.
I agree with that. Let's we have to let Tim in a couple of minutes here. There's one more thing that we could talk about here. Maybe not too much to talk about here, as far as I understand it. Barksdale Resources. I interviewed the CEO a couple of months ago. Liked the story. A couple of months later, the market did stop liking the story. But I know that this one's closer to your heart. What's they're up 70% this week, so I guess good for you or not good for you? What's happening?
Good for me. I own it, and but it has been a painful couple of months. It was really, I wouldn't say the market darling because it was not such a big story, I think, half a year ago. But it was really impressive how Barksdale built the stock price went from 30 cents to 90 cents in anticipation of finally being able to drill, just being able to drill because of a permit in Arizona on a high potential project right next to a world-class mine or soon to be mine. And it was almost impossible in my mind not to find anything, and they found stuff. They started drilling, but those holes were really deep, and they ran into some problems with those deep holes and with the contractor, and they decided to at some point quit that program, not having hit like the model load yet, having some good results, but I wouldn't say that the market. I can understand that the market is not excited about those holes yet because they are not the type of holes that, again, the expectation level was at. The expectation level was at a different level, and then the drill holes disappointed. The financing took a bit longer than I expected personally, and then they did the financing at 40 cents, which looked a bit weak at the time because they came from 90 cents. In hindsight, it was a good thing, I think, because the stock went even lower to 30 cents and 20 cents. And it's a bit like the same topic we just discussed. They didn't kill the project at all. I mean, they just had a couple of tests in a really deep system, an extension of a world-class mine. And because they had to abort the situation a bit earlier, well, way earlier than anticipated, you get into a new price level. And for Barksdale, that became 15 cents, 13 cents, I think even. So from 90 cents to 13 cents. And the project, I would argue that not much changed from a project point of view. But if the stock still, it didn't look pretty, everything that happened with the financing and with the results and with terminating the contract with the drilling company, realizing that more money is needed. And if all these things are laid on top of each other, confidence is gone. And the stock went from 90 cents to 13 cents. And in my opinion, right now, there's nothing that solves this other than the company coming up with a new good plan, like we just discussed. I mean, they found a new price level, 13 cents for a while, 15 cents. And it's a good sign that stock is going up on relatively high volume, not crazy high, but relatively high volume. And hopefully, because the company said within 90 days, they would update the market with their plan going forward. And I think those 90 days are almost there, or maybe we already passed that point. But hopefully, this is a signal that something is coming up. They will need money. So maybe, like you just suggested with Volcanic, maybe they will do a deal with someone. Maybe they will have a financing lined up. Maybe there's another plan that I'm not thinking of right now. But I think it is with Barksdale right now to come up with a new plan and to sort of impress the market again. Like, this is how we are going to move forward. The project is by far not killed, but let's earn the trust of the shareholders back. Because 6 months ago, it was amazing. I mean, 90 cents pre-drilling, finally getting through permitting issues and finally being able to drill, everything was fine. And it's again something like expectations and disappointment. And the stock can just go 80% or whatever it went down on something like that.
Well, yeah, that's pretty much what I've gathered by just reading some of the stuff that people are saying online. Again, a lot of angry people. Maybe goes back to what you said, black versus white. It's really only the one thing, never anything in between. But it'd be good to get Barksdale back on an interview as well. So far, I don't have any strong opinions here. So let's maybe let Tim in, unless you want to say something else.
No, let's talk to Tim. I mean, he came out with some news as well. So let's grill him a little bit because you are the grill master here.
Aspiring.
Okay.
All right, Tim, you've worked with two titans basically. So far with Fury Gold, you worked with Frank Giustra, and now you work with, or you work for, I suppose, as big shareholders for Pierre Lassonde, with Atacama. If someone put a gun to your head tomorrow and said, like, hey, your kid's college fund has to go to one of those two people to manage for the rest of your life, who do you give it to?
Well, that's a tough call. Yeah, and we've actually got sort of three titans involved now because Ross Beatty's Lumina Group is heavily involved with Atacama, our chairman's with the Lumina Group, our CFO, and in fact I just met Ross the other day for the first time. And interestingly, I haven't met Pierre, so I'd probably have to reserve judgment on that one. But they've all got great reputations, and they've built those names. None of those guys came from a wealthy background or had daddy's money to play with, and they've built up the reputation they have.
That's a very political answer. I didn't expect any less than that. Give me maybe a bit of a background too on why I'm even asking you this question. Obviously, know why I'm asking. Maybe not everybody listening. Like, why? How did you even end up working with those people in the first place?
Yeah, it's funny. I didn't know any of them before I started working with them. I had no long-term history or anything with them. But I'd really had the good fortune to work with a lot of really successful companies over my career. HEREIN Resources was probably the most famous one. We found Fruta del Norte in Ecuador when I was the VP Corp Dev at HEREIN, and then I was with Delradian. I was on the board of Continental Gold. And I think, it's tough to find good management teams in this business. And so in every case, I've had people that I knew reach out to me and say, hey, what are you doing? Do you want to look at this project? Does it look interesting? And I think it's important to work with projects where you like working with the people, and that's just generally been successful for me, over my career. And that's really how I got involved with all these people is through people who knew people who knew people who knew me, and just said, hey, what do you think about this project?
And the first one was with Fury Gold, as I mentioned.
Yeah.
How did that deal go down? I guess I suppose you're going to give me another political answer, but are you happy with how it all happened?
Yeah. Yeah, Fiore was interesting. It was funny. Fiore started out when I took over the company. It started out as a Chilean explorco that had projects down in Chile near El Peñón, and we drilled a few holes into one of those, and they were dusters. It looked a great looking project, should have worked, but geology's a tough game, and we drilled some holes and weren't successful. So we were looking for other projects and got introduced to the guys that had just bought the Pan mine in Nevada out of bankruptcy. And we actually met them in Frank Giustra's living room in North Vancouver, and sat down with them and chatted, and we liked each other. And they had a great team down in the US, and we put it together, and I think it worked out really well. There was a point where I think Fiore was probably trading around 20 cents. I can't remember what shares outstanding was, but we probably had a $20-30 million market cap. And at the end of the day, we ended up turning that asset around. A lot of people thought it was a dog that it just bankrupted Midway Gold a couple of years before. We picked it up for $5 million and ended up turning it around. It generated free cash flow for several years, and then we sold it to Calibre for 170 million. And so I think that was I think by any standards that was a successful exit.
In your experience, this went a little bit maybe surprisingly by. But if you're looking for a project, is it typically that you're screening databases? Is it through networks typically that you're really asking people like, hey, we are looking for this type of project. This is the profile we are looking for. How did this even, in your experience, how is it often, how do you find a good project? Because there are 2,000 companies in the world looking for the next big thing.
Yeah, no, I think it generally, in my experience, going through the network of people and contacts, and just kind of spreading the word that, look, we're looking for things. This is kind of the parameters of what we're looking for. This is the geographic parameters. This is the size. I found that generally works best. Because when someone brings it to you, just seeing something in a database, it's tough to really, we'll build our own databases once we start seeing projects, but yeah, just seeing some random database isn't really a useful way. And quite often the really interesting ones aren't sitting in a database, or what you see in the database, you'll look at it and go, nah, that doesn't look interesting. But somebody knows the project will come to you and say, hey, this project's got a bad reputation, but this is why it has that. And it was more the people involved, or it was some issue that's solvable. I think that generally is better hunting grounds.
Do you often immediately doubt those reasons? Because as an investor, I always think you always hear like this has been overlooked, or this has been produced in a low gold price environment. Yeah. This was drilled from the wrong direction, or only vertical holes. There's always a reason why the next company thinks this is amazing, but the previous company was almost like stupid. Is that the first thing you try to find out? Like, why do they even want to sell it to us?
Yeah, that's the first question. Is if something's for sale, there's usually a reason it's for sale. And if as an example, when we were at Fiore, we looked at probably a dozen operating or near operating mines in Nevada and the surrounding states, California, Arizona, and things like that. And our question was always, it doesn't have to be making money now, but we just have to be able to believe that we can go in and make money, because I don't want to buy production ounces just for the sake of buying production ounces. We can say, oh, now we're a 100,000 ounce producer, and we lose money on every ounce we produce. That's not really a good outcome. So So yeah, I'm always pretty skeptical. I mean, there's always any project, there's always a couple of key things that are going to determine if it's a useful project or not. Whether it's size or grade or metallurgy or, social issues, permitting, cultural, community, that kind of thing. And the trick is just to find what are those key drivers, and can you turn the dial on any of those to add value to the project and make it successful.
So you sold Fiore for 150 million US.
Yeah.
Was it 2017, I guess, somewhere around that time?
No, it was after that. I think it was 2020 or 2021 that we sold it. Yeah.
No, you're right. 2017 was sort of when you started, and
we bought the asset. We bought the asset in 2017.
Yeah. And then you joined Atacama in 2022 when it was just a $3.5 million company with a interesting, but maybe a little bit of a long shot, I don't know, exploration project in Chile. I mean, it didn't get more value than 3.5 million, so there must be some sort of issue there. Why did you join at the time?
Yeah, it was a couple of reasons. One, I'm getting to the point, I think, in my career where I sort of thought, well, how many more CEO roles do I want to do? And do I want to keep doing gold companies? I actually started out in copper. I worked in the copper belt in Zambia, and I thought, you know what, copper, it seems like the metal of the time right now. It's got, even though the price wasn't great at the time, you could just see the whole supply demand, lack of discoveries, everything was building up towards, I think, a bit of a boom in copper. And so I thought, well, I want to find an asset that's in that field. And I knew the people that were involved with Atacama Copper, as I said, the Lumina Group, Ross Beatty's Lumina Group, had put that together with a couple of guys from Toronto, with a firm called Metals Capital that I'd known for a while. And I went down to Chile and I looked at the assets, and I liked the assets. And at the time there was some surface access issues where the company wasn't able to go in and work the projects, but I could see potential for it. And I thought, if we can take those assets and then we can start adding some other assets to it, we can really build something here. And again, a lot of it goes back to the people. I want to work with good people, and I think that's what's that's made the difference on a lot of projects. So.
I remember it became quiet, well, at least quiet towards investors, I think, for about a year, until suddenly there was a very big deal announced end of last year. So how did that? I mean, what happened between you joining Atacama and a big deal being announced last year in, I think, September, October? Yeah.
So I mean, we'd actually looked, I think that was probably the third or the fourth deal that we'd looked at. And we'd had a couple of deals get, to the LOI stage and then fall apart for a variety of reasons, disagreements on valuation being the most common one. I think every junior mining CEO is contractually obliged to say that their company's undervalued. So I usually just say that at the beginning of meetings and get it out of the way. But we'd looked at these different projects. They'd all fallen apart for one reason. And then we started talking with the guys at Trinity Capital, and they're quite well known. They've been behind a lot of successful companies like Prime, like Orla, and they had this private company. And I met the geologist who was running it, Charlie Roncos, who was the VPX at Glamis and at Goldcorp. And I liked him, saw the projects, liked them, took him down to Chile. He liked the projects down there. He knew them actually because of Goldcorp's involvement with El Moro and La Fortuna right next door. And it just seemed like this project, this combination, was a winner for a bunch of different reasons. One, it brought a really good geologist in who's very well respected, Charlie. It brought an investor base that's second to none. I mean, we've got the Lumina Group, we've got Agnico Eagle, we've got Pierre Lassonde, we've got Trinity Group, we've got a bunch of really good funds, and that's critical. I mean, I don't know if you guys were at PDAC this year, but there was a really interesting panel that had a couple different people on it, and they really emphasized that the companies that have succeeded over the last 4 or 5 years have been companies that have had, in effect, sponsorship. Whether it's the Lundin Group or Orla with Pierre Lassonde behind them, or something Frank's gotten behind, or those are the really successful ones. And I thought, man, if we can put Pierre Lassonde and Trinity and Ross Beatty's group and all those guys behind us, there's not much we can't do. And I like the projects in Mexico. They're great projects, and we see those as a starting point, but it's not going to be the be all and end all of the company. We want to do acquisitions. We want to grow this thing, and we want to make a real company out of it. And I think we've got the backing to do that.
I think Luke knows a thing or two about that presentation that you're talking about.
Right. Yeah. No. I supported Dave Lotan in creating some of those slides for sure.
Yeah.
But no, for sure. I mean, I see the value in having the right group backing a company, because it's very difficult to raise money, and with people like that, it becomes a bit easier, and networks, and maybe even finding projects, perhaps. I mean, it helps on all levels, I guess. But so right now it's still Atacama Copper, but your flagship became Christina. And I don't see, well, there's a bit of copper as well, but it's not a copper dominant project.
No, it's not. No, we're actually looking at a name change for the company right now. Part of the problem is there's so many junior mining companies out there that pick a name and type it into a search engine, and you'll find some junior mining company that already has that name. And but I think we've got one that we just thought of today that I think we're going to go ahead with. So
what is it?
Oh, I don't want to tell you, because some of the juniors
we want to be the first one to know. We want to judge it.
Some of the juniors going to grab it if I mention it. So I'll keep quiet, and you'll see it when it comes out in the news release.
Okay.
Yeah, let's talk a little bit about the project then. I mean, you had some news this week. I think the first news release, well, you released the research estimate, I think, a couple of months ago, in the process of listing again. And this week you had some news. I think it was 8 meters of 11 grams gold equivalent. What does that mean to you? Is it was it a confirmational hole, or what was it really?
No, it's so the thing about the Christina project, it's a series of veins. They're polymetallic veins, mostly gold, silver, zinc, and they're big, fat veins. They're sort of 10, 20, even 30 meters wide. And the resource that had been done on them had been done really because the private company wanted to have a resource on the books when we did the deal, just to kind of underpin the valuation, when we were negotiating. And so they did a resource. The easiest way to do it was a quick and dirty open pit, put some whittle pit shells around it, and you get a decent resource, but 1.5 million ounces all in. But fundamentally, veins aren't open pit mines for the most part. I mean, you mine these things underground, and that's how I always saw it when I went down there. That this is going to be an underground mine, and there are high-grade, thick intercepts from the drill holes across every one of those vein systems, and there's 4 or 5 parallel vein systems there. And so we looked at it and said, you know what, we need to drill this thing as an underground mine, which means targeting these high-grade chutes within the veins and putting enough drill holes in to fill in the gaps between the holes and bringing those into resources, so you can actually define, rather than 1.5 million ounces at 1.3 or 1.4 grams, what you really want is 1.5 million ounces to start at 5 or 6 grams underground. And then that starts to look like a much more interesting project, particularly, given the concerns about open pit mining in Mexico and some of the comments that have come out of, the government. I mean, there's no actual ban on open pit mining, but it's been thrown around, and, with investors, I think quite rightly, often perception is just as important as reality, and if somebody throws out an offhand remark about banning open pit mining, then you need to start thinking about, well, is this really an open pit mine? And I think technically it's not an open pit mine anyway. This is going to be an underground mine. There's a lot of underground mines very similar to it in the area. There's right down the road, Fresnio has their San Julian mine, which is an underground gold silver mine. I think it's actually the biggest, I read somewhere it's the biggest primary silver mine in the world. And it's very similar. It's underground veins, quite fat veins. And then I think they're mining like 2-3 grams underground gold equivalent. So it's, something, if we can get something in the neighborhood of, 5-6 grams underground, I think we've got a real winner.
Are you going to be doing another listing too, though? Because I don't think you're on the OTC yet, and I think with an OTC you get a Frankfurt listing as well.
Yeah, I'm literally in the middle of about halfway through filling out the forms for an OTC listing. So
okay, fair. Yeah.
Is it? I mean, is the market you're in with the company, is that important to you for your game plan? So, I mean, we may be entering a stronger market based on what we see right now. I mean, you can only judge when you're into it a couple of months, but the first signs are that we are returning into a bit stronger market. Does that
Yeah.
make a difference to you in how you approach the company or the project, Christina? Because you also have 2 other projects, copper
Yeah.
projects.
Yeah.
So is the market, whatever you see there in financing and whatever, making a difference to you, or is your game plan clear? This is what we are going to do in the next 2 years, and that's just we will stick to that.
Yeah, I think our game plan is, you know, I mean, unless gold drops back to 1,400 and copper goes back to $2 or something, you know, then all bets are off. But no, I think you know, we make our plans and we don't worry too much about metal prices. You know, if they're up, great, that helps us. But you know, it's not like we're producing. We're not generating cash from those metal prices right now. So I think, you know, I generally don't worry too much about them.
All right, and if you look at, you've got 3 projects.
Yeah.
What in an ideal case would be the timeline for the next 2 years? And I don't want to go too far into geology right now, but what is it that you want to establish with those 3 projects that in 2 years from now the market says, wow, this company really made some progress, and suddenly we think, not suddenly, but over time they build value? Because right now you are a $75 million company.
Yeah.
After the deal you did, you were a $3 million company. So you have some more value to protect and to perhaps, you know, impress the market to get to a whatever valuation you have in mind is fair, but what is that game plan really?
Yeah, it's so you know, we've got Christina is the focus right now for drilling. You know, that's the most advanced project. We're going to be doing about 21,000 meters of drilling over the next, call it, year and a half. And then the idea is going to be put out a resource update and then think about, you know, do we have enough now? Is the project shaping up that it's worth going into a PEA? And that's going to be the kind of main news flow driver right now. The other project that we're focusing on, though, is the Placetón and Caballo Muerto project in Chile, because that's the one I think it's got the real, you know, chance at being a sleeper project. You know, if you hit a big copper gold porphyry system, particularly one that has grades like El Moro, you know, which is at depth is hitting a gram gold and a % copper over long widths. If we can hit something similar to that, I think, you know, it could be a real game changer. And I don't want to be a porphyry copper developer. I mean, I think that's a game for the majors. You know, there's too many $100 million market cap copper explorers with, you know, $5 billion capex projects that are just going nowhere. And I don't want to be that. But if we can drill this thing out, and we're down actually doing some work right now in Chile. We've made a lot of progress on that surface access issues that have been causing us problems earlier on. You know, we're doing some geophysical surveys down there right now. The plan is, you know, we'll go back and, assuming we get the results we think we're going to get from these geophysical surveys, we'll go back in and hopefully do some drilling in late 24 and early 25, basically the South American summer. So that's really where the news flow is going to come from our existing projects. We've got another copper project in Mexico that, interestingly, is right beside Minera Alamos's Sintana mine, and I mean, like, right beside. We have to drive through the mine gate to get to it. And you probably saw today, Minera Alamos just announced that they picked up another copper asset in Mexico. So, you know, there's been a few people throwing around the idea of a bit of a consolidation of Sonoran copper assets. That is one thing that the presumptive next president of Mexico has been talking positively about, is copper production in Sonora. So I think the time is ripe for that. We'll see, you know, if there's something to be done there. But and then you know, we're looking for other assets, and we're looking pretty aggressively for other assets right now, and those are going to be in the Americas, either precious metals or copper. It's all we're really interested in. You know, staying in jurisdictions that we know, and you know, we've got a few ideas lined up there, and they range really from kind of more advanced exploration projects right up to producing assets, and I think, you know, we can handle all of those. But that's how we see the company growing.
So that would be, I mean, in theory, it could happen that you have one sort of big potential but long shot exploration projects that could become very big if you're successful there, an advanced project in Mexico, and then another project advanced towards production even. So that makes also, if that would happen, you also have a company with 3 stages within one company. We were just talking to a different company. It's not comparable, but I wanted to bring up the example anyways. It was Adventus Mining, who was taken over today by Silvercorp. And what just interests me as an investor is that they have been working really hard for 7.5 years, really building value in a good project, maybe even one of the better projects. and really, frankly, a good team that was buying stock in the market, which is always a good sign because they believe in their own stock, and still they sell the project. Well, people who bought stock in the last 12 months may have made a little bit of money, but
Yeah.
in all the 7 years before that, 6 years, those people are not making any money. So
Yeah.
you can still progress a company to a much higher market cap because they end at the highest
Yeah.
market cap, and maybe in the next vehicle they will grow further. But right now, the market cap grew, not the share price.
Yeah.
What is your opinion about that? Can you
Yeah. I
avoid
mean,
that?
well, one of the nice things about, what we did at Fiore was once we picked up that producing asset, I think we raised $12 million or something like that in 2017 when we bought that asset, just to give it some working capital and finance some of the work that needed to be done there to get it turned around. But, that was the last time we raised money. We never issued another share after that. And so, as we built the share price, our market cap went up because we were funding all of our growth through production and through cash flow. And I like that model. And honestly, maybe in hindsight, we should have raised a little bit of money just to keep people interested and bring in some new shareholders, but we didn't. And, and that worked really well. And so, when our share price went up north of $1, then, our market cap went right along with it. And that's why I quite like the idea of maybe picking up some producing assets, to kind of generate cash flow and not have to continually go back to the market, for funding, or at least not unless you're going back for a specific investment or a specific, thing that you want to do. It's kind of been my same attitude towards taking on debt. Don't take on debt unless you're doing it to fund something that's going to pay back that debt and give you, addition on top of that. So.
For people not being in the room like Antonio and me, I mean, we watch this space every day, but we are not sitting in the room, in the boardroom, management meetings, shareholder meetings. If you were to find a project, and it's not only for Atacama, maybe in the past, do you consult every major acquisition with your main shareholders? In this case, Ross Beatty and Pierre Lassonde and other major shareholders. Would you have to consult that? Or would you do that on your own with the board and would not consult? Or is it depending on size of project?
Yeah, I think it probably depends on the size. We certainly talked to, at Fiore, we certainly talked to Frank. As I said, we had the meeting with the private company that picked up those mines in Frank's living room in Vancouver.
Yeah.
And yeah, I think we definitely go to them and say, hey, does this sound like something you'd support? You're a major shareholder. Can we count on you if we have to raise some additional cash to buy this asset or fund it? That's important. And that's why we have those shareholders. That's why I really wanted that shareholder base, was so we have that firepower to pull the trigger on things that a lot of juniors couldn't do.
What about the team then? It's you, it's Charlie. Is there any other people involved at this point, or is that still growing?
It's a pretty small team right now. Because we're an Explorco, we're trying to keep the team tight. We have a CFO who works out of the Lumina Group. He's part-time right now. He does CFO duty for a couple of other companies, Ross's companies in that group there. And then we have some staff in Chile. But right now we're keeping it small. Another reason I'd like to pick up a production company or a producing asset is because I'd like to have that production expertise, like to graft that on. So that, those guys can not just run the existing producing asset, but look at other assets with an operator's eye and not an Explorco eye. A lot of geologists will fall in love with projects based on the geology. And a mining engineer who knows and has run mines would spend 5 minutes and look at that and go, that's not going to work, So yeah. I like having that expertise.
And M&A is picking up for sure right now. So, people always want to sound smart after buying a project in the bear market. I think we technically may still be in a bear market. So are you following all that deal flow every day to see what companies pick up? And
yeah, it's interesting. I watch it. I like to look at, where are people picking things up? Where they, are they able to raise money? Are they having trouble raising money to complete these deals? So it's all good color. I think, as you say, we're maybe seeing the hints of a better market, but I don't think we're quite there yet. You know, I don't think anyone's dancing for joy or popping champagne corks yet. So, but I think we'll get there. Yeah. You know, the thing with looking at these assets is you got to just have a bunch of smart people around you. You know, my goal is to always be the dumbest guy on the team. So,
Interesting. Antonio, anything that you have on your mind?
Well, luckily for you guys, I haven't been talking a lot. So, and I'm typically the dumbest guy in the team. So if you need tips on how to do that, Tim, I can tell you how to do it. But no, I think again we should do a deep dive interview, Tim. You and I just talk about Atacama or whatever the new name might be, since you don't want to tell me, which I'm kind of hurt about. But yeah, no, this was fun. I've been being a fly on the wall myself. This time was fun.
yeah. No, it's been great chatting with you guys. Enjoyed it.